Sir Isaac Newton quantified gravity, mastered the laws of motion, and invented calculus. His work provided the mathematical framework for the rational world, its value, raising a difficult question. Why does unmatched intellect offer no protection against collective madness? To find the answer, we have to look at the society Newton inhabited. Beneath the powdered wigs and opulent velvet coats of the 18th century elite, the British Empire was struggling. Years of continental warfare had left the crown paralyzed by an unmanageable national debt. In 1711, the South Sea Company proposed a solution. They offered to absorb £31 million of that national debt in a massive swap. In exchange, the government would pay the company a permanent 5% interest rate. To convince the public to fund this, they sold a vision of South America as a modern El Dorado. The Crown granted the company an absolute monopoly on trade in the region, promising ships returning heavy with gold and silver. A government desperate for a bailout met a public hungry for easy wealth. This overlap created a psychological blind spot where a massive financial delusion could take root. If we strip away the period costumes and audit the South Sea Company using modern financial forensics, the deception becomes obvious. The promise of trade wealth was a logistical impossibility. Britain was at war with Spain, and King Philip V restricted the company to sending exactly one trading ship per year. As we look at these handwritten ledgers, the reality of the balance sheet is clear. The company's commercial operations were a failure, producing zero real profit from actual trade. Knowing the ships were empty, company director John Blunt shifted the strategy. If the company couldn't generate value through commodities, it would have to manufacture value through the stock itself. Blunt's pivot transformed the company from a shipping enterprise into a machine for price manipulation, relying on public hype rather than revenue. To ensure the debt swap passed through Parliament, Blunt launched a bribery campaign. He distributed hundreds of thousands of pounds in virtual stock to members of the House of Commons, Lords, and even the King's mistresses. These shares were risk-free for the elite. They were given options they could sell back for pure cash as the price rose. This secured political protection while signaling to the middle class that the empire's leaders were all in. To bring in the middle class, Blunt introduced early margin trading. He allowed citizens to buy stock with just a 10% down payment, essentially letting them gamble on the remaining 90% using credit. He built the liquidity loop. The company lent money to the public, provided they bought more South Sea stock. Rising prices increased collateral value, funding larger loans for more shares. The stock climbed from £128 to over £1,000 by June. By leveraging political bribery and this circular credit loop, Blunt had pioneered the first great pump and dump scheme. But a loop built on artificial credit is a time bomb that detonates the moment new buyers stop appearing. By the summer of 1720, the mania was so pervasive it birthed hundreds of copycat companies across London, including one that famously claimed to be working on a project of great advantage, but nobody to know what it is. Blunt feared these competitors were draining money away from his own scheme. He used his political influence to pass the Bubble Act, which effectively outlawed these unchartered companies. The act backfired. By destroying the smaller bubbles, Blunt inadvertently broke the market's trance. Investors panicked, realizing the entire system was built on air, and began to sell everything at once. The liquidity loop reversed with violent speed. As prices dropped, the stock used as collateral became worthless, triggering more liquidations. By September, the price had collapsed from £1,000 back down to £150. A market crash is the sound of collective belief evaporating. When credit-fueled hype meets reality, the manufactured wealth vanishes in an instant. The aftermath left the British economy in a deep freeze. Prominent families were ruined, politicians committed suicide, and the government banned joint stock companies for over a century. Sir Isaac Newton was caught in the wreckage. Despite his mastery of logic, he lost £20,000, a staggering sum that nearly bankrupted him. His loss prompted his legendary observation: "I can calculate the motion of heavenly bodies, but not the madness of people." Significant pause. While our tools have evolved from quill pens to high-speed algorithms, the internal mechanics of human greed remain exactly as they were 300 years ago.
Let's discuss that in the comments section. And as always, thanks for watching Alux Live. Subscribe for more.